Breaking Bread presents stop losses. Now, in this session, we are talking all about stop loss placement and how to place them with intentions and not fear. I truly do not want you guys to be a trader that think that you can trade without stop losses or that it's not important. This is the most important. This is the most important thing in your trading plan. If you have no capital, then how do you trade? If you don't protect your capital, how do you trade when you start to lose this capital, right? So we want to make sure that we're protecting our capital as much as possible. So in today's session, we are going to break down how to place stop losses with purpose so you're not just reacting to price, and that will have you in control of your risks, your emotions, and your trade. So this is regardless if you have a small account or a large account. This session will help you protect your bread while staying in the game longer. So let's get to it. All right, so what are we discussing today? We're going to talk about what a stop loss is, the importance of it, common mistakes, types of stop losses, placements, examples, small accounts with a stop loss. I'm going to give you some tips. I'm taking to the charts, which is my favorite part. And then, of course, we're going to end with the bread and butter, which is just a brief recap of some of the things that we're discussing in today's session. So what is a stop loss? A stop loss is a risk management tool that automatically exits your trade at a set price to limit potential losses. Now, the importance of the stop loss is to protect your capital from large unexpected losses. It's to remove emotions from the decision-making process. It also helps enforce discipline by sticking to your risk plan. And then it also allows you to stay in the game a long term. Again, that most important part is to stay in the game long term. Right? We're not here just flip some money. Like trading is definitely something that you can learn and teach those that's coming behind you. So we have to make sure we're using the highest probability game plan that we can possibly put together, and us protecting our capital is a part of that game plan. All right, so some common mistakes that we make as traders. I've definitely made all these mistakes. First one is setting stops too tight. So we're getting wicked out of our trade because we're placing price at wrong parts of price structure and we're getting wicked out. Emotional based stops. This is where you're saying like, okay, I have $50 or I'm only willing to risk $50, right? I'm only willing to risk $50. But what are you basing that $50 on, right? Is it based off what price is in? Is it based off structure, right? It should be some type of logic behind where you're placing your stop loss. So just make sure that it's based off your plan and not based off your emotions, right? A mid-range stop. This is you placing your stop loss in between a choppy, consolidated area. I'm gonna show you some examples of that. But you want to make sure you're avoiding placing your stop loss in the noise. We already avoid noise as is, or trying to avoid noise in trading, right? So we want to make sure we're not placing our stop losses in that area as well. And then the last common mistake that we make is moving our stops with emotions. We've all done this one. This is where you see price is pulling back to your entry and it's slowly heading towards your stop loss. So then you take your hand, you place it on the mouse, you take your mouse and you put it on your stop loss and you start to drag it away from price. Now it's starting to look like a police chase. Price is chasing you and you just slowly moving it away because you're hoping it's not gonna get me, it's gonna go back the opposite direction. But it's steadily coming to get you, right? So now you took this small L and you made it into a larger L, right? When you're placing your stop loss, and we're gonna go over it later, but when you're placing your stop loss, it should be based off what invalidates your plan, right? What does price have to do for your plan to no longer be valid? So if price is coming to your stop loss and you're moving it away, well, it's already past your stop loss now. And now it's telling you your plan is not valid, but you won't accept that your plan is no longer valid. So you just keep moving it away. Why would you want to hold on to something that's no longer valid? That makes no sense. Just go ahead and accept the L. We assumed the risk before we got into the trade anyway, right? We said, okay, I'm gonna place my stop loss here. I'm willing to lose this on this trade if this does not go in my favor. Accept it. Accept it, right? No more police chases. No more police chases. All right, so the type of stop losses, structure-based stop losses. So this is placing your stop loss higher highs, higher lows. your lower highs, your lower lows in a downtrend. This is your sideways movement, your range, your consolidation, right? That's your structure-based stop losses. Your volatility-based stop losses is using ATR or the percentage to place your stop loss. Time-based stop losses, this is just where you're waiting for the candle to close to place your stop loss. Then your mental stop loss, which I do not recommend at all. I am not a fan of mental stop losses, especially in this market. I'm not a fan of mental stop losses unless you're just like this expert trader. Then you just got all this experience, then more power to you. But if you're still, trying to become a consistent trader, and you're still new to this game, then I definitely don't recommend you using a mental stop loss. But I understand it because you're probably one of those people to be like, every time I use a stop loss, price comes and stop me out, right? Every time I put a stop loss on, price always seems to find my stop loss. But you're not getting stopped out of your trade because you're using a stop loss. You're getting stopped out of your trade because you're placing it in the wrong space. I'm gonna say it again. You're not getting stopped out of your trade because you're using a stop loss. You're getting stopped out of your trade because you're placing it in the wrong space. So you either have a low probability entry or you got poor price structure, price inside of a range and consolidating, right? Or you just don't have confluence. You just don't have confluence. But by the end of this session, you should be able to trust your stop loss and know the correct placement for your stop loss. All right, so some stop loss placements is market structure. So that could be a below, above, swing highs, swing lows, above key fib levels or below key fib levels, near support and resistance, supply, demand, order blocks, fair value gaps, VWAP, SMAs, EMAs, whatever you want to use. You can use that as your market structure, but just make sure it's at minimum one off the level. Do not place it directly on the highs or the lows of the wick or the bodies, the opens, the close, right? Make sure it's one off the areas there. Time frames. Your stop should match what the higher time frame is saying, right? With any trade, you want to make sure you're going in flow with the higher time frame, saying that just give you a high probability of price heading in the direction and not coming back to get your wick. So if you have the higher time frame saying bullish and the lower time frame saying bearish, then your stop is going to be much wider because you're not going with the flow of price. So keep that in mind. And then also off your setup, right? So your stop should match the reasoning for you taking that trade, right? I only trade bounces and rejects off a higher time frame. I only trade bounces and rejects. So I'm going to use my stop to protect from price coming beyond to get gas. I call it getting gas. Most people call it liquidity. It's all the same thing to me, right? Price is coming to get some energy to go back the other way. So just make sure it's based off your setup. So you should think to yourself, well, if price comes past this level, will this invalidate my plan? Right? That's where your stop loss should be. If price comes back to this level, does this invalidate the plan that I see price doing? Right? If it invalidates it, cool. Let it take you out of your trade. You're done. You assume the risk. It happened. It's just not ready, maybe, or you're not seeing the charts, or you're missing something. Whatever it is, whatever invalidates the plan, stick to that. Right? Why hold on to something that is no longer valid? Why would you want to do that? Right? So if you like to play continuations, then your stop will be where price last pull back, or if you trade fair value gaps, you can use that as placements as well, right? So whatever your setup is. All right, so in this example here, like I said, you're going to use it off structure, right? So we got lows, we got highs, we got lower highs, we got lower lows, we got higher lows, we got higher highs, right? We got fair value gaps in here. We got our fib areas, right? We got some uh, major levels off the higher time frame here with the darker lines, right? So these are the areas that you want to place your stop losses, right? But make sure it's at minimum one off the area. So if I'm looking to take this trade here off the bottom, just trade in the scrap, right? If I trade the scrap, I'm looking to get in this trade. I would place my stop loss at the bottom of this area here because I understand that if price comes back into this area after looking to the left, this is a strong area. It pushed below before it started heading back up. It did it before, and I was doing it again. I know if price comes back in this area, then that's going to invalidate my plan, right? So you can either put it at the lows of this wicks, one off minimum, or use this wick here. It's totally up to you and what you're able to accept the L in, right? Whatever that is, that's what you would want to use, right? Either that area or this area here. And you see you're risking minimum for a lot of profits, right? So that's the whole point of stop losses is to minimize your L's, right? Minimize that, right? But maximize on those gains, right? That's what you're looking to do. Same thing off the top, right? If I'm looking to take this off the top, I'm just placing my stop loss at minimum one off this wick. I'm not placing it on the wick. I'm not placing it on the body. I'm not placing it at the major level. Like, why would you place your stop loss here? If I got in on this candle here, why would you want to place your stop loss where it just told you? Like that doesn't make any sense. So just make sure it's off that area. At minimum one off that area, right? Don't use the actual level to place your stop loss, right? Don't do that. 'Cause you see price came back up here, it would have stopped you out, right? So make sure it's not directly on the level. So just make sure it's off of the area. Same thing with the fibs, right? You don't want to place it directly on your fibs. You want to do it off the area. You don't want to place it directly on the 50%. You want to do it off the area, depending on which way you're going. But right, so just make sure you're at minimum one off in it. But do what you're able to risk, right? All accounts are different. So just make sure you're able to do take the trade based off of that, right? Based off of that. So if you only have minimum risk, you either have to downsize or you got to wait for the next trade if this is too far of a stop loss for you to take this trade. But this is a part of the plan. You should know this before you get into the trade, right? You got to do that math. You got to do that math. And if the math ain't mathing, then that's not the trade for you. All right, so small accounts, your stop should reflect the setup. If that means taking a smaller position to give the trade room, do it. Risk small, think big. So you should be thinking risk first and not the reward. Again, you should be thinking risk first and not the reward. So ask yourself, how much can I risk today and still survive for tomorrow, right? So if you can only risk $40 and the setup cost for your stop loss to be $50, then that's not the trade for you. It's way too many opportunities throughout the day to where you don't have to take the trade. Or you could just downsize, right? If you take five contracts, if five contracts put you at over 50 or over $40, then downsize. Go to two contracts or go to one contract. Right. So you can make it fit your trade, but if it doesn't, I mean, if you make it fit your plan, but if it doesn't fit your plan, then just sit that trade out. It's always going to be another opportunity. You don't have to take every trade. All right, so some tips is pre-plan your stop before you enter, so no guessing. Right? You should know before you get into a trade. All right. This is where price is going to invalidate this. I see this is how many points, and then do the math. If that's too much for you, then don't take the trade. Don't change your stop loss though. Don't try to move your loss up or closer to where price is because that's all you're willing to lose because you're not giving yourself room. You're not giving price time to invalidate what you think price is going to do, right? So if it doesn't fit your plan, just sit it out or downsize so it does fit and give price an opportunity to play out in your favor. Accept the risk before you click the button. Like I said, with any trade, you accept the risk. Just being a trader, you accept the risk that you could possibly lose when you get into this trade. But make sure you're willing to accept that risk. Don't go over something that you can't accept, right? If you're in a trade and your heart beating fast and you nervous, go ahead and downsize. You're doing too much. You should be calm and collected in your trades, right? Protect first, profits will follow. If you don't have capital, then profits are not going to follow. So we must protect that capital to make the profits, right? So just make sure you're protecting that first. And you don't need every move, you just need the right move, right? Like I said, there's a lot of opportunities throughout the day. You don't need them all. You just need that right one. So let price set up for you. Let it fit inside the plan of what your account size that you says that you can accept. And let's just hit that button. Let's just hit that button and find out. All right, let's take it to the charts real quick and let's look at some things. All right, so where are we at? All right, so we're looking at ES. Let's take it to the hours. All right, so I trade scrap, I trade fair value gaps. So that's what I'm going to be using on the chart today. But whatever you use, just apply it to that. Um, apply it to that. So if I'm looking at the chart, I see, okay, we got fair value gap right here, got a strong area here, right? Price got here before, bounce, got here before, bounce, got here before, bounce. And now it's currently doing it here on this candle, right? So for me, I only need two things in confluence for me to take an entry. This is two things in confluence for me to take an entry, right? So I'm looking to get in this trade on this candle here. This is where I drop down to the lower time frame and identify, can I get in this trade earlier? If I get in this trade earlier, even better, right? But if I'm taking it off the hour and I'm just looking at it on the hour, well, what would invalidate this setup, right? If I'm playing this to the upside, what would invalidate this setup? The thing that would invalidate this setup is price getting back below this black line, right? So I would be placing my stop loss either below this wick, minimum one off, or below this wick, minimum one off, right? That's where I would place it at because I understand that price comes back in this area, then that invalidates my idea of price coming back up. Now, is it possible for this next candle to open up, push this area sweep, and start heading back up again? It definitely can, right? But it's a game of probabilities. That's all we got. We're either gonna win or we're gonna lose, right? So it's a game of probabilities. So I'd rather just take this small L. If it turns into a small L because this is only 4 points from here to here. It's only 4 points. I'm only risking 4 points to see how much I could possibly make. So the risk versus reward here is great. It's great. I'm risking 4 points to possibly make over what? Where we at? 90. So over what? 70 points? Over 70 points? That's worth the risk to me. 4 points? 70? That's definitely worth the risk, right? But that's what you're looking for. That's all you're doing, right? What will invalidate my plan? So if I go look at this on the 5 minute, let's say you don't trade on the hour, say you trade on the 5 minute. If I'm looking on this on the 5 minute time frame, and I'm looking at this, I'm like, all right, well, we got price kind of in the range here, right? It's playing in this area. It's not really doing anything, right? I can use these wicks here, same ones that we saw in the hour, just one wick, but I can use this area here, or I can just place it at the bottom of the same wick that you saw in the hour time frame. Price will invalidate when it gets back below this area, right? Now it's up to you if you want to let price close or do you want to let it push. That's totally up to you and what you want price to do. But it doesn't invalidate your idea until price gets below this area here, right? That's when your plan is no longer invalid. I mean, no longer valid. I'm sorry, right? That's when your plan is no longer valid. So let's see it off the top. So if I'm taking this off the top on our time frame, I see this is the strong area at the top, right? We rejected, 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 rejected. This is clearly a struggle area here, right? So if I'm looking to get into this trade, of course, I'm gonna go down to the smaller time frames, but if I'm looking at this on an hour time frame and I'm looking to take entry, well, what would invalidate this trade that I'm in? Well, price getting back above this black line is not something I would want price to do, right? So you can use that as your level, or you can just use the wick of the candle that you got in, which had been, if it was this candle, you would place the stop loss here. If it was this candle here, then you would place it again, someone in this area. But I probably would still use this area above this wick. But I know if price gets above this area, that's not something I would want to see price do, right? That's invalidating my idea. That's invalidating the plan that I see price doing, right? So again, minimum risk, maximum rewards, right? It's definitely worth the risk. But this is why I only play bounces and rejects. I rather catch it off the bottom to head up or off the top to head back to the downside. I'm not a fan of trading continuation Unless I'm already in the trade, that's the only way I want to continue going anywhere. But I'm not looking to take a continuation trade. Let's see what that looked like on a smaller time frame. Same thing, right? All right, so based off the scratch, I got a doji candle, not really a failed two up. So based off the scratch, you definitely could take entry when price gets below this candle here. Play it to the downside. You see price broke back below the major level that we just marked on an hour time frame. So we can place our stop loss above this area here, minimum one off, right? Somewhere in this area. Just make sure it's not on the wick and make sure it's not on the bodies of the candle. Make sure it's not on the major levels, right? As you can see, price broke through the major level and it came back and retested this area. Now, this has nothing to do with the call, but that should give you confidence to hold this trade. A break and retest, that's a lovely situation that you would love to see, right? This is why you don't put it directly on the levels though, because you see price broke the major level and it came back to this major level, right? But this is an opportunity, and I know we didn't talk about this, is trailing your stop loss. So this is where you can take your stop loss and trail it with price. So as price pulls away from your entry, you can trail price. So if I have my stop here, once I got confirmation that price should continue in that direction, then go ahead and move your stop loss down. Price pull back, confirmation, and this is just a pullback to start heading back to the downside. Just trail your stop again and just move it tighter and tighter and just keep up with price. And you're just using structure in your favor, right? Which is that high. All right, cool. Price moving down. You just keep moving it down. You want to keep placing it right above each high if we're heading to the downside. You can definitely do that, right? This is just to make sure that you definitely close out with profit, right? So you definitely can do that. Now, as far as price being in a range and placing your stop loss, let's see if we can find an example of that. So let's say we were looking to get into this trade and we see prices clearly in a range here, right? Sideways movement right here, right? Never put your stop loss here, right? Never put your stop loss here in between this, right? You're asking to get stopped out. You're asking to get stopped out. And this is where most people get stopped out at because you're not identifying if price is in a range or not. You're just getting into your trade and then you're just placing your stop loss. No, identify the range, right? If you're identifying prices in a range, why would you put your stop loss in the middle of that? Right? It doesn't make any sense. That doesn't make any sense. So let's say you took this continuation, right? You plan to break out of this range, you got into the trade with this candle here, right? Right. We see that price was in a range, a wick here, right? It created a little range here. So you were planning to break out of that. All right, cool. We got into the trade with this candle here. Where would you place your stop loss at? Where would you place your stop loss at? Now, for me personally, I would give price back to this area here, right? For me personally. Now, for you, you might be like, okay, well, I'm just going to put it above this candle here and see what price does there. But that would just be a break and retest of this major level. So I just said, don't put it on the levels, your major levels, right? You want to make sure it's off that area, right? And then once price starts continuing head down, you could trail your stop loss if you want to. Oh, I didn't say this, and I want to say this. Let's go back to the hour real quick because I don't want you guys to just let price come and stop you out. I don't think I said this yet. I don't want you to let price just come and stop you out. So let's say you got into the trade off the bottom here. Everything is looking good. We're heading to the upside. We got our stop loss. Let's say our stop loss is down here somewhere. All right, cool. Now I say this next candle open up and it starts to push down. And it's pushing and it's pushing and it's pushing. Now you got price below the black line, right? It hasn't reached your stop yet, but um it's steadily pushing towards your stop loss, right? For me personally, I understand just reading price. If we're in a range and now you're opening up and you're pushing past this level after sweeping this area, that shouldn't happen, right? So I don't want you guys to hold on to a trade just because, well, I'm going to see the plan through. You definitely can, but I'd rather you guys end in profits than nothing at all. Break even is cool. That's cool, but I don't even do break even. I'll take myself out of this trade before it come and stop me out. So once I see price get back below this area, I'm going. It's nothing else for us to see. That I don't need price to come down here and stop me out. Like I don't need that. I don't need that. I will let price set up if it does push down here and start pushing back up again. I would definitely let price set up again, and then I'll look to take entry again. But I don't need price to come disrespect this area again. After it already did it, it tried, it tried, it tried, it tried. I don't need price to come do that. All right, and nor do you. You don't need price to do that. Same thing at the top. If I took this off the top to the downside and this next candle open up and it starts pushing back above this black line, I don't need price to come stop me out. Like I don't, I don't need that. I don't need price to do that. So just keep that in mind. Like it's okay to just take yourself out the trade, especially when you see in price disrespect levels against the trade that you're going in a favor of the trade that you're in. Like you don't want to see that. Like just stop yourself out. Preserve some profits, if any. Preserve some or minimize it just a little bit more, and let price set up again and just look to get into the trade. Right. All right. So let's go over some of the key things that we talked about in this session is protecting your capital for the long journey. That's what the stop loss does. It's protecting your capital so you can live to trade another day. This is the most important part of trading. You have no capital, you have nothing to trade with, right? So we must protect that. And make sure you're basing it off structure time and your plan, right? So make sure you're going with the flow of the higher time frame. Make sure you're using those higher highs, those higher lows, those lower highs, fair value gaps, VWAP, whatever you use, the structure that's on the charts, right? Just make sure you're not placing it directly on the wicks or directly on the bodies of the candles, right? But make sure it's a minimum of one off that level. No stop losses, then no trade. If you're not using a stop loss, then you should not be in the trade. If you don't have that already pre-planned, you shouldn't be in a trade. If you don't have your entries pre-planned, you shouldn't be in a trade. If you don't have your targets pre-planned, you shouldn't be in the trade, right? But the stop loss is the most important part of the plan. You got to make sure you protect that capital. Your stop loss is not to hide from price, but it's protecting your plan, right? So, like I said, you can think, oh, every time I use a stop loss, price is coming to stop me out. But it's really not. It's really not. It's not trying to stop. It doesn't even know you're in a trade, right? It just knows where people place stop losses, and that's how they get their gas and their liquidity. So they're gonna come get that before they continue in the direction they want to go into, right? Um, but just make sure you're using that stop loss. Please protect yourself. Protect yourself. Protect yourself. Protect yourself. Especially in this market, it's been some crazy moves. So just make sure you're protecting yourself. All right, so we have come to the end of this session. I hope the information in this session provides you with the value that you need to be a successful trader. If you have any questions, feel free to DM me or drop it in the comment section of the session here. But until next time, I thank you guys for breaking bread with me, and you guys stay blessed.